Hello everybody, I'm assuming this is all up and running, a minute or so late today, so just if you can hear what I'm saying and see what's happening in front of you, if someone could just let me know in the chat, that would be great. So this is our weekly market recap and catch up and outlook to the week ahead, just to explain how this works. We do this every Friday at 2:30. On a Friday, we have a look at really what's been happening in the week in markets, take a very quick look at next week and see what's happening in markets and where the opportunities might be. Clearly, it's a strange time at the moment. You know, very much news-driven markets around the world. I was talking to somebody this week. I think that the volatility we're seeing, I can't remember volatility like this since the financial crisis. You know, we've got to go back, for me, it's 14, 15 years to see this sort of volatility. So I think from a trading point of view, clearly there are big moves, but also big chances to lose money if you're the wrong side of the move. So risk control, more important than ever. So what we do in these sessions, we take a look at the major markets, then I'll jump into the questions and go through any questions, any markets you want looking at. Let's just do a risk warning. This presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones and Capital.com accept no responsibility for any use that may be made of these comments and for any consequences that result. Spread bets and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 78.79% of retail investors' accounts lose money when spread betting and or trading CFDs with this provider. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. Right, quick look at next week. I mean, all of this stuff almost takes a back seat at the moment, to what's happening with Russia's invasion of Ukraine. Big moves overnight, of course. I think I was still awake. Was it about 1 o'clock this morning, I think, UK time, when there was the attack, the news was breaking about the attack on the nuclear place, generating place. And so massive moves in markets, so coming into Europe today, very different to how markets looked yesterday. But so I think all of this stuff is normally important. The major events for next week, but definitely taking a back seat at the moment. So Tuesday, 2 GDP updates from Europe and Japan. So how well or how badly are those economies doing at the moment? Wednesday the 9th, remember when we came into this year and all we cared about was inflation? Clearly been somewhat surpassed by events since then. But China inflation on Wednesday next week, and Thursday we have the European interest rate coming out on Thursday. So it's some stuff going on next week, but at the moment, still expect the war to take centre stage. I keep forgetting to delete this slide, so I mention it again. I put it in 3 weeks ago, and I think for me it perfectly sums up trading. Our minds have a natural tendency to associate complexity with sophistication, but in trading, simplicity is often your friend and complexity is the enemy. And if you've watched any of our videos, you know I've got a very simplistic approach to trading. I'll talk a bit about some of the trades I've done this week. I did a trade. I'm in a trade from this morning on the Nasdaq actually, and I'll talk a bit about the markets and the way I trade today, as well as looking at some of the stuff you want to look at. But clearly, I think when we first come to trading, we think it's got to be really complicated. And it really doesn't have to be. So in all the three, I've got 3 different ways of trading. I've got 3 separate accounts for it. And I trade in 3 different ways in all of them. But I'll talk about some of these approaches today. To find out more about the company, go to Capital.com. Drop me an email, david.jones@capital.com. Follow me on Twitter, @JonesTheMarkets. Find out more about me and the training course I run, jonesthemarkets.com. And follow Capital.com on YouTube, Twitter, and Facebook. Right. So where do we start? I think there's only one market to start with at the moment, perhaps, and it's the oil price. I did actually when did I remember I watched a bit of last week's live stream just before I started this today because I thought, well, what was I talking about last week? And I did say last week that oil looked like a buy last Friday at $94 or 92, whatever it was. But I said I was going to be a bit nervous of holding it over the weekend because anything could happen over the weekend. I did actually do a trade in the end, at the end of last week on oil. And we saw it, this is the problem at the moment with holding positions over the weekend. I don't really have a problem at all with holding trades overnight or holding them over weekends. Never really bothers me. Clearly at the moment, I think if that's your normal style of trading to run stuff over the weekend like me, there's perhaps a little bit of caution there because so much can change when markets are closed. But this is where markets ended last week. And then Sunday night, when trading resumed, 11 o'clock my time, the oil price gapped higher and the market moved a lot higher. So it actually ended up being a really good trade in the end. I didn't get out at the top. I got taken out on the way up here. But it was a good trade in the end. And but I think it's a really difficult market to trade, or when it's like it is this week. Last week for me, it was an interesting trade because we had the move on the invasion on the hourly chart. It gave up pretty much all those gains on that Thursday. But the Wednesday, it was sort of settling above the old support. So for me, as I said last week, it was not an obvious trade, but it was a nice trade in terms of where my stop's going to go, but having to wear potentially more risk because of the weekend. Anyway, it worked out well in the end. But what would you do now? What would I do now? I have a real problem when markets, run away like this, like we've seen this week in oil. Well, actually this month in oil, and we're 4 days into the month. It's gone from end of February, $95, and it touched $114.50 yesterday. This is West Texas crude, so this is US crude, obviously. So the thing has moved $20 this month, and we're 4 days into the month. So that is, what's that? It's a 20% move, isn't it? 20% up in 4 days. What do you do? And this is where I think not trading is always an option. I think plenty of fingers have been burnt by what we've seen in markets over the last week and a half, with people just jumping in and hoping for the best. And it's difficult, if I were, even today, which I suppose you could say has been a relatively quiet day, the price of oil has still traded in a, $5.50 range. So we've still moved more than 5% today on oil. So plenty of volatility. I think it's a hard market to trade at the moment for me. That trend is undoubtedly up. I actually think it traded back. Did we hit a decade high this week? Hold on. So the high was about 115. Oh, don't tell me I'm having the same problems today I had last week with my charts, where the data's not coming up. Hold on a second. Oh dear. I just have to give up and go and watch Netflix. Hang on a second. I can't bring it up. It's coming up on that. Okay, so let's stick on the dailies. So I do think we actually traded to a level not seen very briefly since 2011. So I think that is like an 11-year high on oil very briefly this week. So for me, hard market to trade when it's moving like this. I'd much rather buy a pullback. The problem is, of course, when we have very news-driven market, obviously, you wait for a pullback, the pullback never comes. It does show you, I think, how this is a great example of how useless indicators are in times of strong trends. I mean, clearly the last week and a half is the exception anyway, but the price of oil has been overbought since the middle of January on the RSI, on the 10-day RSI, and the price has just carried on going up. So for me, can it go higher? Most definitely it can go higher. Do I want to buy it here? I'm gonna struggle to know where to place a stop here. I would probably, if I was trading it now, I'd want my stop the other side of 104, probably $7 stop. But the thing is moving, like we haven't seen in an awful long time. So that's where I would want my stop for oil. I'd rather buy a pullback in oil though than just pile in and hope for it. So I did that trade this week. I haven't traded it since then. Oil. So yeah, that's been it for me for this week, and I still want to be a buyer on dips, but will we get the dip? It's quite interesting that, I'm sure we all hope there's some sort of resolution, diplomatic resolution to Russia and Ukraine. And it'd be interesting to see what happens with some of these markets that have gone absolutely crazy since it happened. You could, I don't know, I think we've seen sharp moves up for oil. Get ready for sharp moves the other way as well, if things change there. But clearly this is a market that is just still incredibly strong. So if we're looking at hurdles, what's the next obvious hurdle for oil? I'm probably looking back at, we've got these highs from May 2011 highs, and they're only in around 115, 116. So again, it's not the way it moves at the moment. It's not that far away. But for me, it's incredible to watch how oil has reacted. But for me, it's been a difficult market to even try and get in on this week. And for me, I'd much rather trade other markets personally for my own trading style. Let's take a look at the old natural gas. Now, natural gas, this is natural gas, the US traded natural gas. There is EU natural gas as well. Let me show you, which I must admit I wasn't even aware of until a couple of months ago, because everyone trades the the US natural gas. But there's look at that first of all. That's natural gas as we used to it. So the market has moved up in the last couple of weeks about 20%, the natural gas spot price. But take a look at EU natural gas. You can see it on this chart here. So EU natural gas over the same period has gone from about 75 to 203. So I think it's interesting because clearly it's a very different market. But you can see the impact, of course, again, that we know that Russia invading Ukraine is having on the European natural gas market. But let's go back to our normal natural gas. So for me, I think I said the other week, the trend is still up. So for me, I'd be a buyer of dips with natural gas trading at 484 at the moment. Where would I put my stop? Again, it's a little bit like oil. It's a tricky one. I'd much rather buy a dip down to 4. The risk is if I wait for a dip down to 4, the dip doesn't happen. But for me, perhaps it's going to struggle again with this 5 to 5.5 area. I think I do have a trade on in natural gas in this account. So for those of you who are new to watching this, this is the trading account I use for the videos and the live streams we do. So it's real money, but it's Capital's real money, not mine. So there is a natural gas. There's a couple of trades on actually 13th of December and the 19th of January. So they're both up £200 or so. We did have oil trades in there. If you're wondering where they'd gone, I think they were closed yesterday, for about 700 and something pounds in the end yesterday. So came out of those and haven't put any new ones on because we haven't done a video on oil in the last few days. But the natural gas trades still running and just carry on running those. So for me, the trend is still up in natural gas. What can you say? I just wonder if five. And we can see, over the last week, $5 has been something of a barrier for the gas price. So let's see what happens. Let's take a look at gold and silver. I think, again, I've got trades on gold, definitely running here. Old trades on gold as well, from October and November. It's actually, I think, the biggest open profit at the moment, not surprisingly, but in at 1778 and in at 1819, and the market at the moment is 1955. So in total, they're up £760, those trades. I think I said as well, in my own trading account, on more medium-term trading, I've got gold trades in from last year. I think from back here, April, May last year. And, again, finally it got a move on. We've watched this big trend in gold. Not big trend, but the trend since August last year. So what's that? 6-month trend now on gold. And this was a great buying opportunity. In hindsight, of course, back in January, the move back to that trend line. So for me, I'm long gold in my own account, and it's doing okay. We're long gold in this account, so I would like gold to go a lot higher than here. I do wonder though. I would just be perhaps a little bit cautious at the moment because you remember last week we were looking at that move when the invasion started, the early hours of Thursday morning or Wednesday morning, wasn't it? When was it? Thursday or Wednesday? I can't remember. Thursday morning. And the price of gold ran all the way up to about 11 o'clock UK time. And then in the afternoon, I hadn't checked it till I got back, and I saw the price of gold had completely dumped. So it came off those levels really quickly from about what, 1975 an ounce. And even though we've seen the price recover since then, so at the moment we're trading at 1956, I would be a bit cautious going into next week. Is gold going to manage to take out 1975? So I just think that perhaps there is some caution coming into this run higher from gold as it pushes towards that 2000 level. So we'll see. So like I say, I've got a trade on at the moment in gold. I'm happy to run it, but I'm just moving a stop up behind it if the thing reverses. And I just think it will be interesting to see. If we go back, let's go back and look at these old levels on gold at the moment from actually all the way back to here. So we saw the all-time high for gold in August of 2020 at 2075 an ounce. And then it sold off, and from September 2020, November 2020, January 2020, 21, 1950, 1975, 2000 was a bit of a problem for gold. So for me, if I was a betting man, I'd be betting that even considering what is going on at the moment, I'd be betting against new all-time highs in gold. Let's see. Let's see what happens. I'd definitely buy a dip in gold. Definitely buy a dip if we saw a big sell-off again. I think that'd be interesting, but I do wonder if it'll start to struggle up here. Let's see what happens. And silver, I've got a trade on in silver as well in my own account. We haven't got one in here. Well, it had an order in here, but it didn't get filled. Oh, silver's interesting. I mean, silver, we do regular updates on silver on the channel. And a few times last year, I said it was the most boring market around. And it really was. Everything else was clearly going up last year. Silver been pretty sideways since July 2020. But $21.50 has been a big base for silver. So, buying the dips there. But it's really struggled to build any rallies. But the rally we're in at the moment in silver, just today, we're pushing to the highest since August last year. So again, we're seeing, 7-month high on silver. So it's a really interesting finish to the week for silver. So like I say, I'm long in my own trading account. Again, I would just start going into next week, perhaps a little bit nervous about silver up at these levels. I think it's going to be an interesting one to watch next week. But, we've got $26 from here and $26.80 from there. So I think, we're seeing a strong day today. For those of you who are fans of RSIs, it's pretty overbought. And because silver has been so sideways, the overbought signals haven't been too useless. So they have sort of worked okay on silver. So I just wonder again, is there going to be a bit of a problem much higher than here for silver? So undoubtedly strong at the moment. That trend most definitely up on silver. There's the move in the current hour. That trend, there we go. If we adjust that trend line, it looks like that. So again, absolutely, I'll be interested in buying a dip if we had it in silver. I'd just perhaps be a little bit cautious going into next week. Of course, we had the payrolls. The non-farm payrolls came out about an hour and 20 minutes ago. The market was expecting, I think, 400,000 jobs to have been added. And in the end, 678,000 jobs were added. So the non-farm payrolls, much stronger than expected. Again, I think all of this stuff is taking a back seat at the moment. But silver strong here. Let's take a look at some currencies, because I saw someone mention pound against the dollar. I did a trade on pound against the dollar this week. It was a good trade in the end. And I did a video on the channel for pound against the dollar this week. And And it's perhaps a good indication that always remember our videos are for trading and not for trading advice. They're for educational purposes only, because I've still got the trade open on pound against the dollar. I know it's been stopped out. But it was actually a good trade. But because I only really look at the open trades in this account when we do the videos, I don't pay that much attention to it the rest of the time. So I think I did the video about here, pound against the dollar. No, it wasn't. That's too early in the week. Let me make this an hourly chart. So I think it was around about here with a stop at 32.50, and the market did run up about 100 points. So I did a trade myself on Monday about here, same sort of setup, and came out of it on March the 3rd yesterday. And today we've just seen the thing fall off a cliff, and I think that's that's pretty bearish, but I think it's an interesting setup for next week, pound against the dollar. We'll have a look at the dollar index in a minute. So hold on a second. Let's just bring up these levels. I think next week for the pound, it's going to be really interesting because 131.50 or thereabouts was a significant low back in December. Okay. And here we are about 65 points away from that level. So we saw significant change in sentiment. The market rallied 500 points off that level up into here, into mid-January, and we're back again. So for me, it's an interesting setup for next week to see if this level holds next week on pound against the dollar. Okay, so let's see what happens. So at the moment, I will be doing nothing on pound against the dollar. Did the trade this week, out of it for a profit, and just wait and see now to see what happens. But I think that's an interesting one. What's even more interesting is Euro US dollar. So Euro dollar, there is a trade on Euro dollar from the video we did on the 10th of February. So I went short Euro dollar, and you can watch it. It's on the site. It was really, really logical short. I didn't think it was going to fall this far, but went short at 114.34, and the market is at 109. So that trade has done incredibly well. It's up about £700 for 250 risk. And I think it's interesting this euro dollar, because that is, look at that has absolutely got clobbered today. So the euro is trading at its lowest since May 2020. So we're at a 22-month low on euro dollar. And for me, going back, the reasons for the trade, you can see it in a bit more detail in that video from earlier in February. I think I put the trade on about here. And basically, I thought the trend was still down. The market rallied up, fell off, rallied again, but didn't push through 115. So it was a nice place to go short with a stop above those highs, those 115 highs. And here we are. That looks really weak, doesn't it? We've got a load of support coming in, about 180 points lower than where we are now on Euro US dollar. So again, going into next week, I would still be inclined to sell any strength in the euro. If we take a look on an hourly chart, you can see how that downtrend, even if we pick up on the downtrend from about 3 weeks ago, let's just pick up on that. There we go. That's been a nice little downtrend, but you can see how over the last couple of days, it's just accelerated. So let's say we got a bit of a bounce, bit of a dead cat bounce in euro dollar next week, back up to maybe 111, this sort of area. Again, for me, that looks interesting from a short point of view. So really weak finish. And of course, we can't look at currencies without looking at dollar index. I think I often say I should get paid commission by the US government for pumping the dollar index as a great trading thing. Look at that, absolutely brilliant. So the trend is up, and here we are again today. Really strong performance. I'm guessing off the back of the payrolls. I've got, again, in my own account, some dollar index positions. But it's been a really good trend, dollar index, since May of last year. That is almost textbook, that trend. Look how well this trend line does. And then comes back down to it early Feb, around about 95, 40. And here we are at 98, 78, wherever we are. So we're at the highest levels for the dollar index since May 2020. So again, for me, if I wasn't in the trade, I probably wouldn't want to be a buyer here for my own approach. I'd rather wait to see if we get another dip again. But looking at targets, this is the coronavirus high, March 2020 for the dollar index up here at 104. And we've got for me, I think some potential trouble at 101. But for me, I would still be targeting 100 plus on the dollar index for now. But I'd probably rather buy a dip. And if the dollar index starts to dip, then the pound and the euro will go up. But I think it's an interesting market. Always an interesting market to watch, the dollar index, and a bit less noisy than just watching a simple foreign exchange pair. So we've done a bit of everything now. Let's take a look at stock market indices. I'd have to say, I still think it's a confusing picture. I think on stock market indices, it's clearly we're in a very different market to what we have been over the last 18 months. We're looking at the S&P here, lovely trend all the way up. Buying the dips. If you were watching the stuff that we did last year, I was saying the same thing every week. Just buy the dips, blah, blah, blah. But we have covered up gold, done gold, so you can just see that come up in the questions, so you can watch the recording. Or you can, while you're watching, I think you can use the bottom bar on YouTube to rewind and go back and watch the gold thing. So this is where we are on the S&P. So the S&P broke that trend in January. But I thought when markets break a trend, I always think, let's give them another chance. The fact it moved lower into February, this is not bullish. So for me, the question at the moment is a new downtrend underway on the S&P? And I'd have to say, with what we've seen this week, it does look that way. So is this actually the start of a real bear market in stock markets? I would maybe I'd still be a bit on the fence for that, but clearly, on the plus side, the market took out the January low on the Russian invasion of Ukraine, but it jumped back very quickly. Okay, so we did see a lot of buying interest on that move through 4,200. However, it's not exactly managed to stage that convincing a rally, has it? So I think we've got something of a mixed picture on stock market indices at the moment. If you thought that actually we are going into a bear market, then selling short, if I was going to go short now at 43.21, I would put my stop loss above the closest I'd have it above yesterday's high, but probably back above this high here, the 16th of Feb highs at 44.88. So for me, to shake off this weakness, the market needs to rally through 4,500. So I think it will be an interesting week next week. You can see this week it's been a little bit up one day, down the next. So I don't think we've had any real resolution as to whether stock market's going to go into a proper, full-blown bear market from here. But for me, that trend from the January highs is definitely still down. And for me, for that trend to not be down anymore, it needs to go above 4,500. I've just seen the comment, people on CNBC say the S&P will be 5,100 by year end. Well, it could happen. Anything could happen, of course, that would be a 15% rise from where we are now. I must admit, I absolutely never watch financial TV. I think it's like chewing gum for the eyes, financial TV. I think there's very little of any merit on there. But I just think, they might be right, but perhaps before it goes up 15%, perhaps it drops another 10%. Who knows? But that's it. I think it's an interesting setup. Let's see what happens. But for me, I am quite happy to sort of sit things out a bit still from a more medium-term point of view with stock markets to see if this thing manages to resolve itself in some way. And it's the same with the NASDAQ. A lot of these stock markets are going to look the same now as we go through them. The NASDAQ looks like that. Had a little, very slight look yesterday through through the trend line. But again, for me, the Nasdaq, you know, we need to see a sustained rally. We don't just need to see the thing blip up for 2 days, then go sideways for a week. You know, if we're going to see a real base formed here, we need to see these things start motoring higher. So again, for me, you know, weighing up the risk still is for a bit more pressure on these markets. So I'm quite happy to wait and see what happens next. You could say, for those of you who are fans of indicators, we do have this thing called bullish divergence. So if I go like that, so here we've got low, low, and we've got higher lows on the RSI. So that's known as bullish divergence, where the market is falling, but the RSI has made higher lows. So it's almost like the RSI is trying to start an uptrend, even though the market's still in a downtrend. So that can suggest that perhaps we're getting to the end of the weakness. But for now, at least, you'd have to stay, you know, it's still weak. I said I did a trade. I did a trade on the not the S&P, the Nasdaq this morning. And looking at it at the moment, it's not actually done that much. But for me, you know, my more medium-term approach is not dissimilar to the stuff I talk about on the videos and during these sessions, looking for trends, riding the trend, blah, blah, blah. Then I've got a more aggressive short-term approach that goes against a very short-term trend. So the trade I did this morning on the Nasdaq, I think I did it about 8 this morning, about here, pretty much where it is now. So I bought the Nasdaq. You know, that was the sell-off overnight in the early hours of the morning when the news of that nuclear reactor attack broke. So I took the view, perhaps the market's overreacted and I've got a stop loss the other side of here. We'll see what happens. At the moment, it's not doing very much at all. But that's a more aggressive trade. So that's the trade I've got on the Nasdaq. But from a more medium-term approach, who knows? That big trend is still down. Let's take a look at some of the European markets. Ftse. Ftse was holding up well, wasn't it? Initially. Not so much at the moment. It's a big down day for the Ftse. It's interesting. So the Ftse today traded as low as 69.70. So the Ftse traded to its lowest point since October. So after, I remember, I think I mentioned there was a story in the Ft about 2 weeks ago saying Ftse outperforms all world indices for like this discrete 4-week period. The Ftse had done better than most after massively lagging behind like over many years. But it looks like it's playing catch up with the rest of the world today. It's interesting, the Ftse. I think if you were an aggressive trade here would be to be a buyer. If you thought that today's move in the Ftse was being overdone, we've got a lot of support for the Ftse below where we are now, 6,800, and in here at 7,000. So an aggressive trade would be to be a buyer. I personally would want my stop the other side of 6,800. But that's interesting, actually. I don't normally say the Ftse is interesting. I must admit it's a market. I never really look at it. It's the S&P and the Nasdaq I tend to watch. But I think that is an interesting one, like an overreaction type trade by the Ftse today. Let's do it. Let's do the trade. We haven't done a trade on here for a while, have we? So we're going to buy the Ftse. We're going to give it a bit of room. 6,800 is the low. 67.50. I mean, a more aggressive stop would be below today's low, but let's give it a bit of room so it's still running in a week's time. So I'm going to say 67.50 is the stop and see if we can get a few £100 points bounce back from here. So we normally risk about £100 on these trades, so on the live stream. So let's do that. Right, so the market's there, 7,048. I'm going to buy 0.33, stop at 67.50, risk 98 and something. Buy. Here we go. In. Let's see what happens with that one. So we bought the Ftse at 7,048. I think it's interesting. Arguably that trend is still up on the Ftse from the March lows, and it is up. Let's see what happens. There we go. That's the Ftse. Let's take a look at the DAX, the German market. Look at that, that's really hit hard, that has, the DAX. Oof. The DAX, there was that big support, wasn't there? We've been watching that for a while on the DAX, back to May of last year, 14,800 on the DAX, and here we are at 13,200. So within a couple of weeks, sailing through. I mean, we're back now on the DAX to where it was in December 2020. It's incredible. So yeah, so the euro getting a massive hit today, and continental European stock markets getting a massive hit today. So really interesting. Pretty weak, obviously. So again, for me, the DAX, I would be selling rallies on the DAX. So it's an interesting one to watch next week. If we see something of a recovery, there's our downtrend on the DAX at the moment. So if we did see it rally up towards 14,000 next week, it looks interesting. And if we take a look at the Japanese, the Nikkei, I bet this is going to look completely different again, because this is another market that just does its own thing. Let's flip it to a daily chart. How are we doing for time? And the Nikkei, you know, again, the Nikkei was a strange market last year. All last year, didn't really go anywhere after February last year, and everything else was still going up. That looks pretty weak today, the Nikkei. You know, we've broken this old 27,000 level. I mean, that looks pretty weak. If you looked at the Nikkei and the DAX, you would think that we are going into a proper bear market from here. S&P and Nasdaq and Ftse still a bit undecided, but the Nikkei and the DAX, you know, don't look too bullish at the moment. So it's interesting, isn't it? I mean, for me, S&P is still the market I would watch when it comes to stock market indices, and for me, it's all about this area, 4,100 to 4,200, these old lows. If the market goes back to here, do we see buyers come back in? That's the test. And if it doesn't, then I think we have to start looking for much lower prices as the year goes on. So let's see. Cryptocurrencies, we haven't done. Let's wrap things up on the stuff I'm looking at. Actually, we'll look at one more market afterwards. But cryptocurrencies, the crazy world of crypto. All the hodlers, if they've been hodling the Bitcoin is currently trading where it was more than a year ago. However, I do think, for me, I would be looking to buy the dip, I think, on Bitcoin. If I had to do a trade, I maybe wouldn't want to do it today, but I think it's another interesting one for next week. I can see there's a little bit of an argument going on in the comments between gold and silver. Always brings out strong opposition and support. So on Bitcoin, you know, we've got these old lows going back from January 2021 at 28,000. Came back to it in June of last year. This sell-off has gone as far as about 32.5. And I wonder if we've built a base down here. You know, we had the sell-off of the highs, the November highs. Down here, breaks the trend, does push a bit higher. So for me, the trade I would do on Bitcoin would be, if it stops going down next week, I would look to be a buyer, and I would put a stop loss, the absolute closest that I have my stop, the other side of 32,500. The other side of these lows would be the absolute closest to having my stop. So I think it's interesting, Bitcoin, down here. I'm not a fan, as I often say, of crypto markets. I think they've brought in a bunch of people who are even clueless than most new traders are. And I'm sure lots of money has been lost just holding on forever. But I think it's interesting, the setup in Bitcoin going into next week. Let's take a look at Ethereum. Then we'll look at one more market. Then we'll take a look at whatever's in the comments. And Ethereum's sort of the same. I think I did say it last week, that arguably the case isn't as strong for Bitcoin. But if I wanted to be a buyer of Ethereum now, I'd wait for it to stop going down for a start. But, you know, I think there's an obvious place for a stop loss. And for me, the very first bit of a trade is, where does your stop loss go? So for me, you know, I'd put it the other side of 2150 on Ethereum. So I think these are interesting markets to watch next week, Ethereum and Bitcoin. And more mainstream markets, I mean, there's an awful lot to watch at the moment with what's going on. The pound, to see if the old lows hold, down at 131.50. Gold, because I do think, despite the comment in the comments, the gold fan in the comments. I do think we could see it start to struggle up here next week, gold and stock markets. Just because I think it's interesting what's going on at the moment, and do we see what happens next with stock markets? The one more market I'm going to look at, I need to jump on something else to do this because we don't have it yet in our platform the way I want to show it. But we did a video on it yesterday, and it's the price of wheat. Clearly Ukraine is a massive wheat supplier. I think oh, what the heck? I don't know how to use this thing. Clearly Ukraine and Russia are responsible for, I think it's 20% of the world's wheat. Where's the chart? 30% of the world's corn. I really want the wheat chart to come up. Yeah, launch chart. There we go. And I don't know why it's not doing it. All right, I'm going to get bored with that already. I want to see a chart of wheat. All right, forget that. Anyway, wheat's up 40% in the last 3 weeks. I did a video on it yesterday, so if you want to see more about it, have a look at the video we did yesterday. You can only trade London wheat futures with us, but it's a market that's gone crazy, and like oil at the moment, I think it's a hard market to get into because it moves so much, but I think it's an interesting market to watch. Right, let's have a look at some of the stuff you want to have a look at. Hold on a sec. Have we seen pound against the dollar? Yeah, we had a look at that. Euro Swiss. What is going on with the euro today? Does anybody know? Does anybody know why in particular? I'll have a quick look on thingy on Twitter. Why it's getting hit so much harder than anything else. I can see people talking about it maybe going to parity with the dollar, but anyway, let's not worry about it. Let's take a look at Euro Swiss. Oh, look at that chart. I mean, that downtrend has absolutely just plummeted, isn't it? The last couple of weeks or so. So Euro Swiss sailing through the old support at 105. Made a temporary support at 103, and here we are down pretty much at 1, near enough, aren't we, for euro against the Swiss franc. So again, what do? It definitely wouldn't be a buyer. I think if you go short here, it's difficult to know where to set a stop loss because you're just shorting into a market that's falling off a cliff. For me, anyway, it would be difficult to know where to set a stop loss. It's a little bit of a finger in the air stop loss, isn't it? So it's just incredibly weak, isn't it? So again, if we had a rally, then perhaps there's an opportunity to go short then. I'm quite intrigued by this though, why it is just so weak. The war, of course, it's a safe haven. Well, not so much though, but the euro is getting hit against the dollar as well. But the pound is not getting hit as hard. I do wonder if, but I wonder because it's nearer to Ukraine, and the risk is for more conflict. I don't know, but it's falling more than the pound and the euro, and the euro is falling more than the pound. Is the point I'm trying to very badly make. But Euro Swiss, incredibly weak. Well, that's about all I can say about that. I think copper. I've got a trade on copper. I think I've mentioned that before. Had it for ages. Hasn't really done anything, but again, over the last week or so, has got a move. I've been in this trade for what seems ages, and it probably is. It's probably about 7 or 8 months in the trade. It was a great trend from 2020, great trend to trade right into May last year, and then it just stalled. The price of copper had just stalled, but interestingly, here we are, just about nudging last year's high on copper. So finally, at least my trade is making some money. Again, with copper, I would just perhaps be, and I'm in the trade at the moment, I would perhaps just be a bit cautious next week, you know, because 490 to 5 has been a real ceiling for the price of copper over the last 9 months or so. So, you know, I'm in the trade, I've got a stop that's trailing. Let's see what happens. I think if copper manages to break 5 next week, it could be interesting. But again, I'd probably rather buy a dip in copper. And this is that, again, it's a hard thing at the moment, isn't it? With markets running away, where do you place your stops and stuff? Rolls-Royce stocks. Let's have a look at Rolls-Royce. So an individual stock, down 5% today, 4.7%. I remember this being, I mean, this has been hit massively over the years, hasn't it? There we go, look at that. So this isn't Rolls-Royce Cars, which is owned by BMW, of course. This is Rolls-Royce, who make engines for planes, amongst other things, Rolls-Royce Engineering. So again, for me, I absolutely wouldn't be a buyer. I've got, you know, if I see a chart like that, I'll go and look at another chart. It's of no interest to me, but I know that people do like this stuff that gets absolutely beaten up. I suppose if you really wanted to be a buyer, it's perhaps an interesting one to watch next week. You know, we've seen it historically, sort of 85p, 65 to 85p has been something of a floor for the price of Rolls-Royce. So it's maybe interesting, but it's a massive high risk one for me, by the way I would judge it, because it's dropped. What's it dropped? It's dropped about 30%, hasn't it, in the last couple of weeks or so. So it's not one for me, but perhaps it's of interest to some who don't mind losing money quickly. It's quite. I suppose it's interesting down at these levels, but I absolutely hate charts that look like that, because the problem is, you know, it would have looked cheap back here as well when it was £6.64, and it would have looked cheap at £3, and then it would have looked cheap at £1.16, and the thing just keeps getting cheaper and cheaper, and it's the whole not catch a falling knife thing, isn't it? We looked at silver, cocoa. We haven't looked at cocoa for a while. So we look at cocoa. I mean, the interesting thing, of course, with all of these commodities going up in price, you know, just think about what this is going to do for inflation for the rest of the year. Look at where the oil price is. Look at where wheat is. Look at where, you know, natural gas is in Europe. Look at all these different things. Inflation is going to be a bigger problem and for longer, I think. So there's a whole other, you know, set of challenges out there for central banks. So for me, for cocoa has not reacted as sharply as some of the other commodities have been to the Russia-Ukraine situation. But the trend is still just about up for cocoa. So for me, if I had to do anything, I'd be a buyer. So I'd be a buyer where it's trading now, 25.93. Probably for me, the closest I want my stop, because I'm looking for a big swing, would be the other side of the December lows, to try and catch it if we get a swing up like that. Let's see what happens. But for me, a buyer on dips for cocoa, and I've traded it a bit over the last few years. I don't think I've done a trade for quite a few months in cocoa, but for me, it seems a fair enough buy to me down here. You know, that trend is going back to 2017, so we're nearly 5 years into that perhaps more gradual trend in cocoa. So I think it's an interesting one to watch. Do you ever sell your long-term trades? Yeah, of course I do. I might stick with them for a few months, like dollar index. You know, the dollar index. I've done a couple of. I remember talking about this last year, and I bought in. I did my first dollar index trade for this turnaround in January 2021, and I was way too early because it wasn't until June it really started moving. And I've done a couple of more on the way up. The latest one I'm in, I think, is in from down here, from October. So I've been in the trade since October, end of October. And I will sell it, of course, but at the moment, if the trend is still up, I want to try and run that position for as long as possible. So I bought in here, and I've got a take profit stop, probably about 96.5 at the moment. I'd need to check. So yeah, I'm more than happy to come out of trades. But it's really important. Like in palladium, not so well now, it is really strong palladium, but like in palladium here, from 2018 through to 2020, it was a fantastic market to trade because it felt like it would just go up every day. So I think there are times, when you're in a market that's moving really well, and palladium's interesting because we're nearly back up to the all-time highs for palladium. It's another interesting market for next week. When a trade's moving well, we want to try and run it for as long as possible. I think I might have shared a stat recently, a few weeks ago, that I was horrified by. We looked at client data, and almost 50% of clients close their trade within the first hour. I couldn't believe that, but it is true. I mean, to me, it seems absolutely crazy, but I think my take on that is that people are snatching at their profits really quickly, or they're running away from a loss really quickly. And you have to cut your losses, but you've also got to give the market time to move in your favour. And the sort of trades I do, an hour's move is just noise. It's just absolutely. Look at the where's the Ftse trade now? Where did we buy it? I can't even remember where we bought it. But the Ftse's at 7,034. I bought it at 7,048. So the market's moved 14 points against me. That is just noise. But when you're in a trade that's working, and it's much easier said than done. I want to try and milk that trade for as much as possible. So I do close out my longer term stuff when I think the trend's changed. But for me, the dream trade is a market you're in, and every week it just moves a bit more in your favour. AXP and BAC. BAC, what is that? BAC. Is that BAC? Backblaze. Or is it I thought Bank of America's BAC, isn't it? I'm not getting confused, am I? I am getting confused. If you could put in the name of the stock as well as the code, because let me just have a quick double check on that. Yeah, Bank of America. Okay, Bank of America. I mean, everything's getting hit at the moment, obviously. I mean, if I was looking at Bank of America back here, that trend was up, and the question now, and of course it's the broader question for all stock markets, are we seeing the trends change? Are we seeing all these trends we've been in the last couple of years finally coming to an end? So for me, I would be tempted to give it one last chance of a buy. I wouldn't buy it yet because it's still really weak today. I think if you're into watching stocks, it's quite an interesting one to watch next week, Bank of America, because we got a lot of support from last summer at 36 and support from September at 38. So I think it's interesting. So I'd be tempted to be a buyer. It's just got to stop going down first, to be honest. And AXP, I know what AXP is, but I can't remember. American Express, of course. American Express. I'd be a buyer as well. Again, not today. Wait for things to calm down a bit. But American Express, the trend is still. I mean, that big trend is still up. I think it's interesting if it pulls, but we've got this whole zone from December where it built a base around 150. It's 173 at the moment. If we've got a deeper sell-off next week and then a bit of stability, I think it's an interesting one. So it's holding up probably a lot better than other stuff at the moment. Lean hogs. I don't know if we do lean hogs. No, we don't do it, unfortunately. Can't look at those. Do you ever set a profit target? No. Good question. Because I never know. I never know how. I never decide, oh, that's it, this market's gone high enough, I've got to come out of the trade. If I go back to the dollar index, who knows where that market's going to go. So I think in my head, 101, 104-ish. But I'd never just hit sell when it went to 101, if it went to 101. I think markets can, oil is the great example, isn't it? If we were talking about oil a month ago, who out of us honestly would have said when oil was trading around 85, it'll be $30 higher in 6 weeks? So again, for me, I'm just quite happy to run it and just gradually tighten up a trailing stop loss. That's really how I do it. Okay, we looked at Rolls-Royce. Cotton. I haven't looked at cotton. But this was another one, I think. Last year, great trend in cotton. Still a trend. I mean, it's been perhaps a bit uneventful over the last couple of weeks. But I remember, I think we did talk about this last year on a live stream, and I remember saying, look at the price of cotton. That is going to feed into inflation. So the price of cotton from 2 years ago has gone from 50 to 120. So it's up 150% near enough, the price of cotton in 2 years. Again, for me, I'd rather buy a dip. So I'd be sitting and waiting. But that trend is definitely up in cotton. So for me, personally, I'd rather see a bit of weakness, but I'd rather be a buyer. Sugar was one that just came to mind. I should have watched that a bit closer, actually, because there was definitely a trade in sugar. It's been a really good market, again, for me, the last few years, because we've had good trends, we've had nice swings, and I think I last traded it end of last year, and I hadn't been paying attention to it, and we've seen it, look at sugar, swinging higher again today. So sugar, that's at its highest levels since 2017. So this is a 5-year high in sugar, just about today. So that could be an interesting one to watch next week. And this again, you know, going back to inflation, look at how expensive all this stuff is compared to where it has been. I do think, I don't know what to make of it, but I think the next year, couple of years, are going to be very strange in terms of inflation, cost of living, interest rates, all of that. I think we are in a very different environment to what we've experienced for many years when it comes to markets. So let's see. There's a bit of conspiracy chat about gold. Always love that. Always love a bit of gold conspiracy. We should get onto the whole silver JP Morgan conspiracy. Well, it's not a conspiracy because they did get fined for it, but holding down the gold market. Let's get into that later. Aluminium. All-time highs in aluminium. Oh, look at that. What a trend. And again, for me, this is the problem. When markets are going nuts, where would I get in? I always struggle with it. That was obviously, in hindsight, back in November. Nice little pullback there. Old support. And here we are. I mean, how much has that moved this year? 2,800 to 3,800. So moved 1,000. So about 35% or something this year, the price of aluminium. Crazy. And again, where's it going to go? I'd have to say it's going to go higher. I'd rather buy a dip, but incredibly strong this year. Much better investment than gold, aluminium. Have you heard about Beto ETF? No, that was nice and easy. Never heard of that. MTU Aero Engines. Where's that one listed then? Euros, okay. What do they do? Doesn't say. I don't know if it's the fact we've only got a little bit of data on them, or they're a recent flotation. Let me have a quick look. It's a bit messy from a chart point of view. For me, it's a little bit messy. If they did IPO last year, it's been sliding since then. It looks like they've shaken off that weakness. If I absolutely had to do anything, I'd be a buyer at 194 with a stop at 180. But it's all a bit scrappy, is how it feels for me at the moment. We looked at the S&P. Nickel, I don't know if we covered nickel, but let's have a look. Yes, we do. Oh, look at that as well. Wow. And a great trend, you know, a great trend again over the last, 12 months or so. And then just I mean, it started accelerating in January of this year. I mean, it is crazy. The price of all these raw materials in the last couple of months, you know. And if we'd have gone back just a couple of days, we'd think, well, how much higher can it go? And it's gone, more than 10% higher since yesterday's low. Tricky markets to trade for me. I'll stop saying that now. But the trend, you know, undoubtedly up. Palantir, one of the Wall Street Bets board's favourites, isn't it? Palantir. Software, isn't it, from memory? Software, big data analytics. Chart looks pretty poor to me. So we saw the low February 24th, last Thursday, low at 10. So again, for me, no interest in being a buyer. The trend will be down. Absolutely no interest until it stops breaking its downtrend. We had the old lows in at 8 something. I think just steadily moving lower. Talking of downtrends that are around forever, let's have a quick look at Alibaba. See how that's doing. Still going down. I mean, that has been an absolutely brilliant downtrend since those October 2020 highs. So we're 15 months into that now. Alibaba trading at $100, back to where it was 2017. So again, if $100 gets broken, I think the risk is for perhaps another trip lower. Meta, Meta, the old Facebook. Meta, what are they called? Meta platforms, aren't they? I did do a video. We did a video on Meta. We never have that much interest when we put stock videos on the channel. So we don't do them very often, individual stocks. And I think I was a buyer at 220 with a stop the other side of 200, and it got taken out. I mean, I did wonder again, is it overdone, that initial fall by Meta? And I would say, based on what it's done since then, no, it hasn't. So again, for me, it's a bit of a barge pole stock, Meta platforms, until we see it start to make a base. For me at the moment, to talk more broadly about it, I've talked a bit about my longer term investment approach, which is just buying ETFs basically that track the S&P and the NASDAQ. I think I said November last year, I offloaded some of those because the market got a bit choppy, and I haven't bought any from an investment point of view this year. And I think it's hard, it's always attractive to find these stocks like Meta, that's down, it fell pretty much almost 30% in the day, here. But you're buying a falling knife. I think, like I say, it's a much more different investment environment that we have at the moment. And my attitude, not from a trading point of view, but from an investing point of view, is to protect what I've got rather than looking to go out and find more stuff to buy. I'd much rather buy stuff when it's doing this rather than trying to figure out where is all this going to end. So I think we are in a very different environment for investing and trading, even coming into this year, before Russia invaded Ukraine, before all of that. And it's just got even more volatile since then. So I'm quite happy to sit things out. Sterling yen, GBP, JPY. Great market last year. It was one of my favourite markets in the first part of last year. Also getting hit today. It was, again, going back to this whole trend thing and running trades for as long as you can if it's going in your favour. Great trends until about, I sort of hear it stalled, didn't it, sterling yen? For me, I'd be looking to be a buyer next week. We're still on sterling yen in this sideways range, aren't we? So for me, you can see just how much of a floor 148 to 149 are for sterling yen. So for me, it's interesting. I'd be standing aside. Let's see if we see some buyers come back in next week. I mean, it's a pretty horrific day today for sterling and the euro, isn't it? So let's see. Let's see what happens. As value stocks, I feel it should be the value that dictates the value, but also the demand and the buying. What do you reckon? Well, I think, value stocks, I'm sure there'll be some great value plays out there at the moment, because things are a lot cheaper than they were 2 months ago. But sentiment clearly plays a part. I'm sure there will be some absolute bargains, perhaps when we look back in 2 years' time, look at where some stocks are trading now. But we shouldn't undermine the importance of sentiment. So whilst I don't look at fundamentals, I completely understand that clearly it's fundamentals that dictate perhaps the value, what a stock is actually really worth, but sentiment plays a massive part. And at the moment, from a stock point of view, everything is getting hit at the same time. That's a good username, Slosho, to go with your comment. We did look at gold and silver early on. So if you wind back the stream or watch the recording when it's finished. Gold and silver is there. I've seen a bit of pressure on US markets this afternoon. What's going to be interesting is if these early, so the NASDAQ trade I did is underwater at the moment. What's going to be interesting is if these overnight lows in the likes of the NASDAQ and the S&P hold this afternoon. So we'll see what happens. Don't forget to find out more about the company, go to Capital.com, david.jones@Capital.com. If you have any questions for me, @JonesTheMarkets on Twitter, JonesTheMarkets.com to find out more about me. Follow Capital.com on YouTube, Twitter and Facebook. We are going to wrap things up there. I've slightly overshot today, so we're going to wrap things up there. Thanks for coming along. Still crazy markets. More important than ever to manage a risk. We'll do it all again, of course, next Friday. I think we'll see where all these markets end up. Very news-driven markets at the moment. I think if you don't want to trade and you sit on your hands, perfectly sensible thing to do. And let's see where we are with all these markets this time next week. So we'll wrap things up there. Have a good weekend.